A lot of people think becoming a billionaire takes some secret formula or crazy luck. But when you really look at the people who've made it, they all have something in common: daily habits that are intentional or unintentional, built on focus, repeated with purpose. Warren Buffett's a great example. He didn't just stumble into wealth, he didn't start rich. He just built smart habits early and stuck with them. This video is about showing you those kinds of habits, the ones that help you grow your money, your mindset, and your time. They've worked for Buffett and many other billionaires. And if you apply even a few of them, they might just work for you too. So, let's start with one of the most underrated daily habits behind Buffett's success, something that shaped his thinking pattern above investing in finances. Habit number 1: read relentlessly. Warren Buffett spends up to 80% of his day with his nose in a book, a newspaper, a report, anything that builds his mental edge. His advice? Read 500 pages every day. That's how knowledge works. It builds up, like compound interest. Now, obviously, most people don't have hours to spare, but that's not the point. The real takeaway is consistency over volume. Even 20 to 30 minutes a day, if you're focused, can shape how you think, what you notice, and the decisions you make. And get this, a 2019 study by the National Literacy Trust found that young people with strong reading habits are 4 times more likely to have solid financial skills compared to those who rarely read. That's not a coincidence. Reading trains your brain to absorb, analyze, and decide the exact skills money management depends on. So, how do you actually build this habit in real life? You don't need a stack of hardcovers. Use what fits. Save articles with Pocket or Instapaper, and read while commuting. Try audiobooks on Audible or Blinkist. Listen while walking, cooking, or working out. Make it a rule: 10 pages or 10 minutes before bed instead of doom scrolling. The goal isn't to read like Buffett. The goal is to think sharper, and it starts with what you feed your mind. Now, while reading sharpens your mind, this next habit strengthens everything around you, from your career to your peace of mind. Habit number 2: cultivate strong relationships. Warren Buffett's success isn't just built on numbers, it's built on people. He spent decades working with the same tight-knit circle. His bond with Charlie Munger, for example, spans more than 40 years. And it's not just about business strategy, it's about trust, respect, shared values. Buffett once said, "You will move in the direction of the people you associate with." That's not just philosophy, it's survival. In a world full of noise, having people around you who are honest, grounded, and looking out for you, that's rare and powerful. Studies also show that people with strong social connections are not only happier, but also make better financial decisions. Why? Because they have someone to reality check their thinking, share ideas with, or lean on during tough moments. So how do you actually build relationships like that, especially in today's world? Start small. Reach out to the one person you respect but haven't connected with in a while. Make it consistent. Block time for real conversations, not just likes and comments. Be valuable first. Offer help, insight, or support without expecting something back. And most importantly, stay around people who make you better, not richer, better. Because if you're surrounded by the right people, success doesn't feel like pressure, it feels like momentum. So while strong relationships give you the people power, this next one is all about how you play the game itself. Habit number 3: invest in what you understand. Buffett doesn't invest in hype. He invests in what he actually understands. He calls it staying inside his circle of competence, meaning he avoids businesses he can't fully grasp, no matter how trendy they are. That's why during the dot-com boom in the late 90s, while everyone else was throwing money into random tech startups, Buffett sat out. People thought he was out of touch. But when the bubble popped and portfolios crashed, Berkshire Hathaway barely flinched. This approach takes patience, but it works. At age 48, Buffett's net worth was around $100 million. Today, it's over $150 billion. That's not just compound growth, it's strategic clarity. So how do you apply this if you're not managing billions? First, be honest about what you actually understand, whether it's real estate, e commerce, your own industry, or even a specific niche. Don't copy other people's investments just because they sound smart. If you can't explain how something makes money, don't touch it. And if you're curious, learn. Expand your circle slowly, not blindly. Buffett's edge isn't being the smartest guy in the room, it's knowing where his edge actually ends. And in investing, that kind of self awareness is worth more than any hot tip. And once you know where your edge is, the next habit is knowing how long to hold your ground. Habit number 4, focus on long term value. Buffett isn't trying to flip stocks, he's trying to own good businesses for life. His words? Our favorite holding period is forever, and he means it. He's not glued to stock charts or sweating every headline. He's looking 10, 20, even 50 years out. Instead of trying to predict short-term market moves, Buffett focuses on one question. Is this a solid business with long-term potential? Because over time, the real value reveals itself, and the short-term noise just fades away. For regular investors, this mindset is everything. Checking your portfolio every day? That's just anxiety fuel. Chasing news-based trades? That's gambling with extra steps. So, how do you build this habit into your real life? Start thinking in decades, not days. Before buying any stock or asset, ask yourself, would I be okay holding this for 10 years? Focus on businesses you believe in, ones that make real money, offer real value, and can last through ups and downs. Use automation to your advantage. Set up recurring investments in long-term ETFs or index funds, and stop checking them daily. If you feel the itch to react, pause. Give yourself 24 hours. Most panic moves aren't decisions, they're impulses. Buffett's wealth didn't explode because he was constantly making moves. It grew because he gave good decisions enough time to compound. Now, even with a long-term mindset, where you put your money still comes down to one thing: who's running the show? And this next habit is about it. Habit number 5, seek honest and competent management. Buffett doesn't just invest in businesses, he invests in the people behind them. He once told shareholders, "It is a real pleasure to work with managers who instinctively and unerringly think like owners." That one sentence tells you everything about what he values. Leaders who care more about building something great than padding their bonuses. Because here's the truth. Even the best business ideas can get wrecked by bad leadership. Buffett looks for 3 things: honesty, skill, and skin in the game. And if you're not a professional investor, you can still spot the signs. Read the annual letters. Do they communicate clearly? Or is it all jargon and spin? Look up executive pay. Does it line up with performance, or is it bloated regardless of results? Check for insider ownership. Do the top people actually own shares? Or are they just collecting paychecks? Look at their track record. Do they do what they say, or change the story every quarter? Red flags? Frequent restated earnings, sketchy bonus packages, and corporate setups that look like they were designed to confuse you, not inform you. Buffett avoids all of that because solid leadership doesn't just run the business, it protects the investment. And once you've found the right company with the right people, there's still one last thing that can make or break the outcome: the price you pay. Habit number 6, insist on attractive pricing. Buffett doesn't just look for great businesses, he looks for great deals. His rule? No matter how solid a company is, it's not worth it if the price is too high. Because in investing, your return doesn't just come from what you buy, it comes from what you paid for it. The mindset traces back to his mentor, Benjamin Graham, who taught him the core of value investing: buy quality at a discount. Look for stocks that are underpriced based on real fundamentals. Not hype, not trends, not Twitter buzz. That means Buffett rarely jumps into a hot stock just because it's moving. In fact, he often does the opposite, waiting patiently while everyone else chases the noise. So, how can you do the same? Learn the basics. Understand price to earnings ratios, PE, debt levels, cash flow, just enough to know if a company's value matches its price. Set alerts or price targets and wait. Buffett often keeps a wish list and doesn't act until the price is right. Don't follow hype or crowd momentum. If everyone's buying in a frenzy, chances are it's already overpriced. Buffett says it best: price is what you pay, value is what you get. The more disciplined you are about the price, the better your upside, and the safer your downside. So, yeah, none of these habits are flashy, but they work. If you found this video helpful and want to go even deeper into how Buffett actually invests, not just the mindset, but the mechanics, check out our other video, Warren Buffett's Smart Investment Basics for Newcomers. It breaks down his core investing principles in plain language. Perfect if you're just getting started or looking to stop guessing and start making smarter moves. Thanks for watching.